Hey guys, it's Ted Bogert. Welcome back. You know me from the TED Show, and of course, you know me from Homelendia Mortgage Group. But we're kicking off a new show. It is September 1st. Happy September. I'm here with one of my best friends, one of the best guys I know in the industry, the one and only CEO of Homelendia Mortgage Group. It is Laurence Heisler. We're launching the show Mortgage Matters. We want to talk about all things mortgages. Not the boring stuff, but the stuff that you keep asking about and that you try to figure out on your own. And Laurence has been around a long time and he's got the insights. So we're going to chat about it. I'll impart my wisdom in there, probably not a lot, but we're going to absolutely tap into Lawrence's brain every single week live. Hey, buddy, how you doing?
I am good, Ted. Good to see you. Happy Friday. Looking great as usual, my friend.
Well, thank you. You too. Listen, it's Friday. I can't believe it's September 1st. I'm still kind of in shock over that. It's getting to be fall. UCF had their game last night, right? I think Big 12, all that good stuff. I'm talking like I know anything about that, but the foosball. But I like September. I like this time of year, and I'm super excited for what we have to come. So before we get into Mortgage Matters, why don't you tell them a little bit about you for those who might not know who you are?
All right. Yeah. So I'm Laurence Heisler. I've been 25 years now, Ted, in the mortgage business. Can you believe that?
You were a babe. Yeah. A baby.
I was about 10 when I got started, and we'll go with that. But
that's good. I like it.
But yeah, I love the mortgage business. I really do. It's been a passion of mine to be able to work with people and help people get into homes. And you kind of get I think hardened in this business sometimes because of everything that we have to do to get somebody to the closing table, and it's just it's a lot. But when you see the clients and you find out the impact that it makes on their lives, it makes it just worth all the stress and headaches that we go through to get them there. So I have no plans on stopping this business, and I want to retire helping as many people as I can to get into homes. And therefore I started Homelendia Mortgage Group. So amongst my 25 during my 25 years, I've had my own company. I've managed companies. I've managed offices. I've just been a loan originator, so I've been through everything, and I've worked for direct lenders, mortgage banks, and now Homelendia Mortgage Group is a mortgage brokerage business, which out of all the models, to me, is the best.
Why? Why is it the best? I think people don't understand the difference between direct lender and mortgage broker. So give them a little bit of information on that.
Yeah. So basically, we have the ability to work with almost an infinite amount of lenders, and we're talking wholesale lenders. So we sort of cut out the middleman. We'll put it in terms that people can understand. When you work with a direct lender, let's say that direct lender has their own administrative office, they have their own buildings, they have their own overhead. And so they have to take a big chunk out of that before they can pass it on to the consumer, where we're working directly with the wholesalers. So we get better pricing. I mean, it's better interest rates is what it is at the end of the day. So that's a big draw, but also being able to have like such a variety of programs that we can really get anybody that's approvable. We've got a program to get them approved. So that's the two big things I look at that put us apart from lenders.
I love the mortgage bro. I started out originally with a direct lender. And so moving to being working with a company that's a mortgage broker as mortgage brokers, just being able to say yes instead of constantly no. If it didn't fit in the tiny little square peg, you had to say no. And nothing against my friends that do direct lending. I know they're doing great and they're flourishing. But for me, coming from the insurance world and being an independent insurance agent, it's the closest thing to it. You want to take a look. Everybody's got a different program, a little bit of different guidelines. And so we're able to take the buyer and kind of work with what they have and find the best program for them with their scenario. And as you probably have experienced like me, I know we both have, buyers are coming to us and there's, things that we have to overcome. There's challenges we have to overcome. This market's a little bit different. It's shifted. And so being able to be a mortgage broker and have opportunities and options for them is a big deal.
Yeah, and speed's a big thing too. So being on the other side of the fence, I remember, like trying to make a point to people like, well, you can't work with a broker because they're at the mercy of the lender and they take forever to get closed. That is so far from the truth. The fact of the matter is, these wholesale lenders have really honed in their business and their skills, and it's unbelievable. We had a loan last month that closed in 7 days, which I've never worked for a lender that could get it done that quick. So it's cool. We're quick on our feet. We've got a variety of programs. We still give the same service that I've always given. We're in direct communication with our agents and our clients on a regular basis. And I take pride in that. And I personally give my cell phone number to my agents and my clients and the listing agents, everybody in the transaction, guys, here, call me. If you have anything at all, I don't care what time it is, when it is, if you have a problem or you have something you have a question about, call me. So the service part of it is always going to be tight with my company.
I agree. I totally agree. Let's talk about some topics because good morning, Wendy Stewart. See, I can see comments live. I don't know if you can see them on your end. What's up, Wendy Stewart? Happy Friday. The elephant in the room. Talk a little bit about what your thoughts are on interest rates.
Yeah. So
everybody's asking. And if I didn't ask it, we would get off here and people go, why didn't you talk about interest rates, Ted?
Yeah. So great question. And of course, everybody knows that the rates have gone up substantially since last year. And so now the question is, what's next? Where are they going? And first of all, let's talk about the interest rates going up. So when they first started going up, everybody pretty much stopped, right? Like, oh my God, I can't buy a house. Let's wait till they go back down. Well, the chances of them ever getting back down into the twos and even the threes, we may never see that again in our lifetime. So, I think people finally understand, like, that was such a special time, and those that were fortunate enough to buy then, awesome, you timed it perfectly, right? But now we're getting back to what's more of a realistic market, and most of the people that have been around for a while know that even as high as the rates are now, they're not anywhere close to how high that they've been in the past, right? Like we've seen 12, 15, 17% interest rates. So it all comes down to what's really important to a client. What are they looking to do? Why are they buying a house? What is their big why, their reason to want to buy a house? And where are they living now? And what are they paying now? So as interest rates have climbed up, so has rent. And people are learning quickly that they get settled into what their rent is. And then all of a sudden the landlord says, hey, guess what? We're going to go up another $500 a month.
It's true.
And they're getting body slammed with this. So what we're trying to focus in more on is, what is an affordable payment that a client would be comfortable with, that's in their budget, and we'll get them into the house now, as opposed to waiting until the rates go down. So that's really what we're focusing on. So where are we at right now on a 30-year fixed with really good credit? You're going to be probably somewhere in the sevens right now. It actually creeped up over 8%. I saw a statistic about a week ago that the average rates were at 8.0 something. But they've trickled back down and they're floating around in that sevens range right now.
Yeah, I think I'm so glad you brought that up, because I hear a lot out there. Well, just hold off until the rates come back down, or get now and refinance when the rates come back down. And I think that there could be some, obviously I'm in the same belief system as you, that I think we'll see some trickle down, but we're never going to see twos and threes again. I doubt it in our lifetime for sure. But I think that it's important to educate. That's what we're trying to do here on the show too, is educate you all, kind of our background and our thought process on interest rates and the market and what we see on a daily basis and how it goes. And because Laurence has so much experience, it's good to tap into that brain while it's still morning. So we're tapping into that brain before it gets crazy in the day. I'd be remiss if I didn't talk a little bit about Hometown Heroes, because that I keep hearing, well, that program is gone, but it's going to come back. We're just waiting for it to be funded again. What are your thought process there? People who are holding off and waiting for it to come back.
Yeah, Hometown Heroes was super popular, especially when they opened it up to anybody that works in Florida, not just the heroes that it originally was intended for. Um, Initially, they were saying it was going to be about a year before they opened it back up. Now we're hearing that by January they may open it up. I think it may be even sooner. It's a very popular program. We all know that our governor is running for president, and he's looking for ways to, keep in good favor with the people of Florida, and this certainly did that. It's great for our housing market, and we know how much of the economy is driven by the housing market. So I wouldn't be surprised if we see it come out even sooner than the beginning of the year. But with that being said, I think it's also important to let our customers know that there are other ways to get them into the house
Right.
with very little or nothing out of pocket. And so we've got loan programs for that. We've got other down payment assistance programs that are super popular and are readily available in the state of Florida. So we encourage our clients that haven't put a whole lot of money aside to buy a house to still come and talk to us. Let's see what we can do to help them.
We like to put the puzzle together. That's what being a broker is all about. You take all the pieces and you try to figure out where the pieces go based on that particular person's or those particular buyers' scenario. Jim Alifat, hey Jim, says, looking at the history of rates, these are still relatively low historically. They were 11 to 13% when he first started in the mortgage business. I've known Jim for 1,000 years. And he's right. I mean, double digits, man. That's what it was. It was crazy. But people still bought homes. We just got super spoiled. We really did.
Yeah. I had a customer about a month ago that was, rightfully complaining about where the interest rates are right now. And I said, hey, do me a favor, go home and ask your dad what the rate was on his first house he bought. And she called me the next day and said, okay, I guess it's not that bad of a rate.
It's historically it's not. And then the other thing is you have other bills that you're paying an APR of 20%, 18%, 24%. You just have to look at your scenario. You want to make sure you're not house poor, but you want to work with a professional, and we'd love for you to work with us because we don't want you to get into a house where you have immediate regret and it's too close to call as far as being able to comfortably make your payments every month. We really do sit down and work with you.
Well, and I think something that's really important to point out, and you had kind of alluded to this earlier, Ted, is I call it the cost of waiting. Okay, so people, again, they'll say, well, let's just hold off on buying and let's wait till the rates go down. So let's take that scenario and kind of slice it up here a little bit. Right now, we have some really cool things working for us as buyers in this market. We're seeing seller concessions that we did not see 6 months or a year ago. Right. We're seeing prices that are stabilized. They're not going crazy every month. We're in more of a realistic market. So if you were to buy today, even if the rates were going to drop, and let's say we're confident they're going to drop in a year or two, we're hopeful. I don't know what's going to happen. I wish I had that crystal ball. Yeah, I would have bought Apple stock when it was about $1 a share. But anyhow, so with that being said, if you were to wait to buy, then you have to understand what's going to happen when you wait. So when interest rates go down, what's going to happen to the market? Well, more buyers are going to come out, which means demand is going to go up, which means sellers now have more buyers looking at their house, which means they can then raise the price of that house. Okay, so you're going to be looking at higher prices on homes, significantly higher if rates do drop. Number two is right now, if you buy, you're gonna lock in the taxes based off of the tax roll today. So again, every year that you wait to buy, that tax roll is going to go up, and you're going to pay more in real estate taxes. So there's some huge factors that go into waiting, not to mention that if you're renting right now, then your interest rate is 100%, right?
Agreed. It's crazy
So
out there because of the rent situation, especially in Central Florida. I mean, it's everywhere, but it's crazy. I was talking to somebody who's paying $2,800 or $2,900 a month and for rent, and had to come up with the first month's, the last month's, and the security deposit. So you're already at 9 grand ish there, just to get in. I mean, 9 grand is a lot of money that you would have had to have saved. So you're getting in this range of, hey, why would I not want to have that money and put it toward my down payment on my mortgage, or put it toward the closing costs, and really, really get into a house that's yours. I mean, I preach this all the time. I also think that people, you're talking about the cost of waiting. It's the same people who said 6 months after the rates started going up, gosh, I should have done it in 2020. I should have done it in 2021. And they absolutely should have. And it's just because it's a lower interest rate doesn't mean that you waiting is going to be a good thing. Just don't think that these rates are going to go back down to 2%. I seriously doubt that'll ever happen.
I always encourage customers that are thinking about buying to just Google a chart of housing prices throughout history, and just look at 30 years. And the chart goes like this, right? Now it'll have little wiggles in between, right? And you might get caught in one of those wiggles where maybe you paid more, or you were at the top of the market at that time and the market dips a little tiny bit. But even the worst market crash that we will ever see in our lives in 2008, and when those values dropped, everybody said, oh, they're never going to come back to where they capped out at. And guess what? They not only came back, but they're higher than that now.
Sure did.
So over time, real estate's always going to be a great investment. And run the numbers and look. And I always also tell my clients, I'll have clients that'll say, well, Laurence, you got me pre-approved, but I can't find anything in that price range. And my first question to them is, well, where are you looking? Right? So take a drive, go around Central Florida and look at what, Central Florida has to offer. And I'm talking like outside of Orlando, right? Like go to Davenport, go to Mineola, or out past Mount Dora, Sorrento. And there's beautiful areas that are selling houses for much, much less than what you're going to find in, maybe the downtown Orlando area. So there's values out there still.
There are. All right, Laurence, what's the best way they can find out more about you, us, and Homelendia Mortgage Group?
Yeah, so we love people to go to our website. You can check out everything there. We've got all of our loan officers. We've got Ted on there. We've got everything that all the people that work here at this great company. It's HomelendiaMortgageGroup.com. You can also reach out to me directly. My cell number is 407-448-3303. If you reach out to Ted, you want to reach me, Ted can hook you up with me as well. So thanks so much for having me on, Ted. And I just
great every week.
Yeah, we're growing, guys. So if any of you have thought about a career in the mortgage industry, or you're in the industry now and you're maybe not real happy where you're at, or you're looking for a change, just let us know. We would love to talk to you and see if Homelendia might be a good fit for you and for us as well.
That's a great point. That's a really great point. And we have so much more that we're going to be talking about every week on Mortgage Matters. So if you have questions or something you want us to talk about, just shoot me a text or message me. I'd love to have a topic where I know it's on everybody's mind, because there's a lot on everybody's minds right now. And so we want to be a resource for you. We want to be your partner. And so reach out to us every week here. Mortgage Matters. Thanks, buddy. I appreciate you. Y'all have a great long weekend, and we'll see you soon. Bye, everybody. Bye.